Bitcoin just cracked $66,000 for the first time in 2 months. Spot ETFs have bled for 12 straight days. BlackRock alone dumped over 800 million in 48 hours. And while everyone on crypto Twitter is screaming bear market, the actual smart money is doing something completely different. I'm going to show you exactly what that is, where the floor probably is, and how I'm trading the chop. Let's get into it. Quick recap so we're all on the same page. As of this morning, June 3rd, Bitcoin is trading in the 66,000 range. Intraday lows printed below 66K. That's the lowest level since April 2nd. Off the all-time high near 126K last cycle, we're now down roughly 48%. Fear and greed is sitting at 23, extreme fear. But the price action is the symptom, not the disease. The real story is the flows. US spot Bitcoin ETFs have now posted 12 consecutive days of net outflows. 12. The total damage over that stretch, roughly $3.98 billion pulled out. Yesterday alone, June 2nd, was another 519 million gone. BlackRock's IBIT led the bleed at 388 million in a single session, and the day before that, 440 million. That's the same fund that absorbed money like a sponge for 18 months straight. Now it's hemorrhaging. Here's why ETF outflows hit different than regular selling. When you sell Bitcoin on Coinbase, it's one trade. When $1 billion exits IBIT, the authorized participants have to mechanically dump actual Bitcoin on the spot market to redeem those shares. It's not sentiment driven, it's plumbing, forced selling, and that's exactly the pattern we're seeing. Flows and price moving down together. When ETFs sold and price held, that was institutions rebalancing. When ETFs sell and price collapses with them, that's distribution. The third largest weekly outflow ever, paired with a clean break of 73K support. That's not a coincidence. Stack on top of that, Strategy, Michael Saylor's company, sold Bitcoin for the first time since 2022. Only 32 coins, but symbolically, that's the loudest sell signal in this cycle. The guy who said never sell just sold. And Mt. Gox moved over 10,000 BTC, about $739 million to Konkiki to fresh wallets on June 2nd. Creditor distributions ramping ahead of the October deadline. More potential supply hitting the market. Now here's the part nobody's covering. While Bitcoin ETFs are bleeding nearly $4 billion, capital isn't leaving crypto. It's rotating, and the rotation is very specific. XRP ETFs pulled in about $20 million over the same window. Hyperliquid, Hype funds added almost 11 million on an 11-day inflow streak. Near Protocol pulled in 7.6 million. Small numbers compared to the BTC bleed, but the direction tells you everything. Allocators are cutting the core position and placing selective bets on assets with either regulatory clarity, like XRP, or real product market fit, like Hyperliquid. There's also a bigger pipe to be aware of. AI ETFs pulled in over $4 billion in Q1 alone. That's where the institutional money is going right now. AI is eating the risk budget. Bitcoin is competing with NVIDIA and the AI index, and right now it's losing. That's the macro context. Not the end of crypto, just a rotation. Let's talk levels. Here's the playbook I'm running. To the downside, the immediate support I'm watching is 65,950. That's a multi-swing low and the first real bid I trust. If we lose that on a daily close, the next stop is 60K. Realized price sits around 54K and the 200-week moving average is near 58K. Those are the deep cycle floors. I am not predicting we get there. But if you're a buyer, those are the levels where I'd actually deploy size. To the upside, we need to reclaim 72,974 as a daily close to even talk about a bounce. The bigger level is 73,800 to 75K. Until we get back above that range, every rally is a sell. Don't get cute. Don't try to call the bottom in extreme fear. Let the chart prove it. One more data point. Deribit's max pain for the June 26th expiry sits between 77 and 78K. That's where the option sellers want price to drift. It's a magnet, not a guarantee, but it tells you where the dealer book is positioned. Here's exactly what I'm doing. Not financial advice, just my playbook. 1. I'm not adding spot below 66K until we get a daily close back above 68, catching falling knives and extreme fears how accounts die. 2. This kind of choppy, range-bound action is exactly what grid bots are built for. I've got a Pionex grid running on the 65 to 72K range right now. Every wiggle prints small. When the market doesn't know which way to go, you get paid for the indecision. I'll drop the link to my Pionex setup video in the description if you want the exact configuration. 3. I'm watching the rotation plays, not chasing, watching. If XRP holds 130 support and ETF inflows keep building, that's a setup. Hype has momentum, but it's a higher risk asymmetric bet. 4. I'm keeping dry powder. The single best thing you can do in a tape like this is have cash ready when the real capitulation prints. And we have not seen capitulation yet. Fear and greed at 23 is uncomfortable, but the actual flush usually shows up below 10. So zoom out. Bitcoin lost 66K ETFs are in the worst outflow streak of the cycle. Sailor sold, Mt. Gox is moving coins, AI is stealing the institutional bid. That's the bear case, and it's real. But the smart money isn't running, it's rotating. The Fed is still in play. Max pain sits 12 grand above spot, and every cycle has a moment that feels exactly like this, where the weak hands fold and the patient ones get rewarded. I don't know if we bounce from 66 or flush to 60. Nobody does. What I know is the plan. Respect the levels, let grid bots earn the chop, keep cash ready, and don't get shaken out by a streak of red candles. If this breakdown helped you, smash that like button, hit subscribe, and ring the bell so you never miss a move. Cypher Edge, daily crypto intel.